The stats are in, and it's pretty bad. The Toronto Real Estate Board just came out with the September numbers, both year over year and seasonally adjusted, and it's pretty gruesome. In fact, I think it's actually probably the worst month of statistics that I've seen in my career. Before we jump into the numbers, I'm going to ask you to hit that subscribe button if you enjoy this content and like this video so it can be pumped out to more people like yourself. And for those of you who don't know me yet, my name is Adam Nadler. I am the owner of Vision Real Estate. And if you have any questions about real estate whatsoever, feel free to click on the link in the description below. That'll connect you to a calendar where you can book a quick 15-minute chat with me at a time that is most convenient for you. Or feel free to shoot me any question to adam@visionrealestate.ca and I will get you a personal response within 24 hours. Okay, so I'm going to make this one short and sweet and just go over the main numbers that I think are the most relevant to be focusing on. Let's start with sales volume. For I think the fourth consecutive month in a row, we have staggeringly low sales volume. And in September, it was down 44% year over year. But the thing I really want to focus on is month over month. It was actually down almost 11%. Now, the reason why I think that in particular is pretty bad is because August itself was a particularly slow month for sales volume in real estate. So being down 11% off of that is pretty staggeringly low. When we look at average price, both month over month and year over year, it's actually not as bad as I thought it would be. We're down 4.3% year over year and 2.7% month over month. Again, that's not great, but having said that, we did see a huge interest rate bump in September right at the start of the month. So I was expecting it to be a little worse than that. Now let's move on to total new listings and the sales to new listings ratio. Total new listings are down by almost 17% year over year. And the sales to new listings ratio is down by 22%. These numbers I do want to focus on for a second here because inventory was extraordinarily low last year in September. And to say that we're down quite significantly from that means that we have extremely low inventory right now. It's just that sales volume is so radically low that even with low inventory, we're still feeling that crunch. And to tie that back to average price, I think that's what's keeping a bit more price stability than people were expecting. In this environment, you would expect prices to be going down a little bit quicker, but because we have such low inventory, it is causing a stabilizing effect on price. If we start seeing inventory pick up and new listings start hitting the market with a little bit more ferocity, then we are definitely going to start seeing a big decrease in average price. But that doesn't seem to be happening. The next number we're going to look at, though, was pretty shocking when I saw it. It's days on market. Property days on market are up 84% year over year. And listing days on market is up 64% year over year. Just a quick explainer on these numbers. Listing days on market means a single listing, but a property can be listed a couple of different times if they're going to terminate their listing and then put it right back up. So it's important to look at property days on market because it gives you an overall view, but you can see here that properties are just sitting. They are not selling. People are having a really, really tough time selling in this market, but only if you're a specific asset class. And we're about to get into what that looks like. Condos. I have been talking a lot about the condo market versus the detached market and how those are radically different in my previous videos. If you haven't checked them out yet, I do a full breakdown and analysis on why condos are weathering the storm a lot better, but we can really see it here in September's numbers. So although total condo apartment sales are down 35%, which is almost at par with the grand total, the average selling price of a condo is actually up 12% year over year. And this goes exactly right back to what I was saying in my previous videos about buyer pools having shifted down. As interest rates climb, the cost of borrowing increases and people can afford less, pushing buyers down into lower price brackets. And they're expanding at the bottom, and along the bottom of price bracket is condos. They are the cheapest thing on the market right now and always are. So when money becomes really expensive to borrow, the cheapest item in a marketplace always becomes the most popular because it is simply the most affordable. So this is what's giving condos a lot of price stability right now. And in the city, in the downtown core, particularly of Toronto, they are actually doing quite well. And the final numbers are on the rental market. It'll be no surprise to anybody that prices for rental condos are up 20% year over year. And because condos are doing so well, both in price and they're achieving such high rents, this is why investors are actually flocking to the city right now. And what I'm seeing is a lot of activity there, particularly on condos. So there you have it. Those are the numbers. Leave a comment below. Let me know, what do you think is going to be happening with the condo market as interest rates continue to rise? And what interest rate do you think we are going to be seeing come October 26th when the next Bank of Canada announcement takes place? Comment below. Let me know what you think we are going to see from the Bank of Canada. That's it for today. See you next time. If you like that video, click the subscribe button on the right, or feel free to enjoy another video here on the left.